Hi everyone, do you know that all currencies of the world are pegged against the US dollar following the Bretton Woods system? And since then, the US dollar has been the reference for calculating the value of all currencies all across the world. But in the past few months, the US dollar has been surging and gaining value, hitting levels not seen for the past 20 years. The two major reasons for the stronger dollar are hiking interest rates by the US central bank to counter the inflation caused by COVID supply issues and the war in Ukraine. Other reason which is contributing to stronger dollar performance, which most people are not aware of, is because it acts like a safe haven, similar to gold in times of recession and geopolitical tensions, which is a topic for discussion in itself for some other time. Now, to put this in quantitative perspective, the US dollar has almost gained 15% against the British pound, 16% against the euro, 23% against the yen and 6% against the rupee, all in just the past 1 year. The dollar serves as the world's reserve currency, which means most of the world's transactions take place with dollar exchange. So changes occurring in the dollar have huge implications not only for individual countries and the economies, but instead the world economy as a whole. So today we'll discuss how a strong US dollar hampers the economy of the world and what are the factors fueling this discrete dissipation of the world wealth. To start off, the low-income debt-ridden countries such as Sri Lanka suffer the most when the dollar appreciates. These countries take debt from either world financing bodies such as the IMF or other nations such as China, and their debt is always valued in dollars. So when the dollar appreciates, the debt these countries owe also appreciates, making it more difficult for their local currencies to pay off the debt. For example, according to Fitch ratings, the debt undertaken by top 35 emerging market economies or developing economies to be more precise, since Jan 2020 has been constantly growing in the wake of rising dollar value. It has peaked as high as 30% of the original now, making these nations particularly vulnerable to the foreign currency debts. As a result of this debt appreciations, nations such as Sri Lanka then take bold and risky macroeconomic moves, such as taxing their economies more, or issuing inflationary local money, or keep on borrowing more. All this further deepens the recessionary scenario or hyperinflation or debt crisis, or all three together based on the path they choose. Now, coming on to the second point of dollar's rising impact, the US trade deficit impact. As the dollar gets appreciated, so will the products from American exports to other countries. In turn, when labor-intensive countries such as China, India, and Vietnam can either manufacture in-house or trade among themselves at lower cost, so why would they trade with US at stronger dollar value? This will ultimately lead to increase in America's trade deficit, which in the hindsight not only impacts the economy but other economies as well. But the question is, how exactly does this happen? How does their trade deficit lead to world economic impact? Well, to start off, it is not that the world economy directly suffers at the hands of rising US trade deficit. Rising deficit means that the US is not able to trade with other nations as favorably and comfortably as they used to. This gives rise to a concept known as protectionism. Protectionism means when a nation decides to apply government actions and policies that restrict the international trade. To explain how protectionism impacts the economies, let's understand this from the example of the US-China trade war, which has been brewing over some years now. Tariffs on goods, also called taxes on goods between the US and China, have been increasing since mid-2018. In 2018, the tariffs stood at 5% levels from US and 7 to 8% levels from China. But since then, these have risen to almost 20% and 27% for respective nations. This has resulted in value of the goods being imported in both the countries rising from the $50 billion levels to $350 billion levels, thus making imports far too costly for the consumers of both the nations. Not only this, we can see the impact of protectionism on a world level as well, against the liberalizing policy regime which allows for more open free trade amongst the world nations. Total trade-based policies and measures have been far more tightening and conservative in the protectionism concept, leading to almost five-fold increase in the trade measures being applied against the liberalizing regime since 2009. Coming on to the third major impact of strong dollar, the reverse currency effect. European Union members like Greece, Ireland, Portugal, Cyprus, and more, although are less worried of their debts rising at the hands of investors now, because their debts are handled by the body known as European Stability Mechanism, which was formed to help rescue them. But this has somehow taken a darker turn again now. A stronger dollar has introduced a concept known as reverse currency war, a situation in which countries work to make their currency stronger against the dollar to tame the inflation and stop focusing on the growth aspects of the economy. To put into simple terms, as dollar appreciates in value, the central banks in developed countries of Europe need to raise their interest rates on an average by an extra 0.1%. to counter a 1% decline in their currencies. This effect is more pronounced in the emerging market countries such as India, because of which the investors are not willing to park their funds in the markets because it's riskier, because of the stronger dollar. Now, for the fourth point, for the impact of stronger dollar, companies are not nations. The companies, whether American or foreign based, are all concerned about their businesses being impacted at the hands of the strong US dollar. For example, companies such as Salesforce have raised complaints about the surging dollar on their recent earnings call because they are concerned that the stronger dollar is chipping away the value of revenues from foreign markets, since it's making their products less competitive as prices are rising in local currency terms. Just to sum up all the points we've discussed, a strong US dollar affects the emerging and developing countries the most, since it becomes more difficult for them to pay off debts. It creates a protectionism regime because of the rising trade deficit, which ultimately leads to foreign currencies adopting the reverse currency wars to tackle the inflation and protect their own currencies. All this not only impacts the economy of the world at consumer level, but also on corporate level when companies watch their wealth being eroded and products being left isolated because of the strong dollar. These strains are the reminders to the people of the world yet again of the quote, "Our currency, but it's your problem," in the words of the former US Treasury Secretary John Connolly in the early 1970s. And problems, yes, they are, for sure. So next time when you sit down to have a debate about how dollar impacts economy, don't forget to mention this discussion we have had. That's all for today, folks. If you felt the content and the discussion was knowledgeful and contributed something to your understanding of dollar and economy, do press the like button below. And don't forget to subscribe to the channel. I'll see you all in the next episode with more mindful content for your knowledge appetite. Mindfulness, signing off.